Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny and Bert, the Dividend Diplomats. Guess what we're about to talk to you about today? Dividend stock purchases. So get ready and see what companies we added to our portfolio last week.
Smash that subscribe button. Give Bert and I a thumbs up. We can't wait to dive into the stocks that we bought during this past week of March. Again, the main goal of the game is to keep adding to your dividend income by acquiring dividend-paying stocks, baby.
Yep, I turned my hat around backwards. I'm ready. I'm juiced up. I am hyped. I am ready to go. So let's talk through these purchases and see how much income we added to our portfolios last week.
Again, the way that we evaluate how we buy dividend stocks is we keep it so simple, so simple. And again, if you're new to this channel, know that we have 3 dividend stock screening metrics called the Dividend Diplomat Stock Screener. First is the price to earnings ratio, which is the share price, and we use the forward earnings expectation to give you a price to earnings. Currently, S&P is trading at, over 40 times earnings. So therefore, we're looking at something less than that, and preferably in that, below 20 if we can, or below their competitors on average. And Bert, what's that second Dividend Diplomat stock screening metric we like to use?
That dividend payout ratio, where you take the dividends per share and you divide it by the earnings per share. Typically, we like to see less than 60%. We think a perfect payout ratio is between 40 and 60%. But why do we focus on 60% or less? It is not sustainable for a company to pay a dividend that is in excess of its earnings in the long run. Therefore, we keep a very close eye on this metric to make sure that you are not paying out more money than you are bringing into your company. And Lanny,
this slides into the third dividend metric. And I know, Bert, you're teeing that up for me.
Yep.
We like that below 60% threshold because we're dividend growth investors, that keyword on growth, because we want these companies to be able to continue increasing that dividend payout. Because again, the goal is to use this dividend income as a form, as our passive income to pay for every expense. And we want that to grow year after year after year after year. There's Bert's head, the bobblehead movement. Now, so we look at the growth rate as well as how many years the company has grown their dividend.
Yeah, and what was exciting about our purchases from this last week is we have some heavy hitters in the dividend growth history. I think we have 2 dividend kings, 1 dividend aristocrat, and 1 company that's increased its dividend for 15 plus consecutive years. So we mean it when we focus on dividend growth history. We want those high quality dividend growth stocks in our portfolio.
It's kind of like Shaq when he tried to do the Shaq pack, baby. We're all about the dividend growth, baby.
Geez, well, on that note, we're always looking at the market, as you know. So we like to tell you about our purchases because we're here making videos. We're talking about stocks we're watching, on how we analyze stocks. It's important for us to show you that we're not just making this up, and we're not just doing this just to get views on our YouTube channel. We are actually putting our money where our mouths are and buying the stocks that we're actively talking about and saying we're keeping an eye on. So to us, it's a very important thing, and that's why we love putting this video together.
And a lot of these dividend stocks that we bought during the week, you actually could have found on the last round of the dividend stock watch list, the one that Bert put together, and even going back to the one that we put out in the beginning of March about the March dividend stocks to buy this month. So even the stocks we talk about, we end up purchasing them. We don't just talk about it and say, hey, good luck, guys. We actually go, oh, yeah, we're buying the stocks that we do talk about and we have on our list.
Exactly. Say, Lanny, there's this. Oh, sorry. I was going to say for this first one, when we start diving in, we have a major twist coming in here from the weekly stock purchases. Don't we, Lanny? Yeah. Why don't you tell us about what you did differently this week compared to every other week?
All right, guys. So we know about my Vanguard weekly strategy. That stock price on Vanguard was approaching, I believe, 102 on Monday. And something about that price was just a little high. And, the yield before their increase was below 3%. It was actually well below 3% now going into it. Not that I use a yield as a barometer, but I'm like, man, this price has gone up approximately 40 to 50% since I started acquiring the shares. So I'm like, all right, let me pause on that. Not that I won't go back to it, and not that I won't do a weekly investment, but instead of putting in around 250 to 300 into Vanguard between my wife and I, Bert mentioned it, we went to 2 dividend aristocrats, one being a dividend king, one just about there to being a dividend king. So in my portfolio, I own Pepsi, and that's on my watch list. Ticker symbol is PEP. My wife has owned Coke, ticker symbol KO. Um,
Heated
now,
household rivalry right there.
the rivalry. So I actually bought 2 shares of Pepsi on Monday, March 15th at $133.56. But I didn't stop there. I actually bought another share of Pepsi on Thursday and one more share on Friday for $131.50 and the next for $132.93. So in total, my Pepsi investment actually ended up to being just under $400, and that yield was just around 3.25%. I actually added amongst those 4 shares of Pepsi, I added over $17 to my forward income.
Fantastic. I mean, if you're not going to be buying VYM, why not go for one of the greatest dividend growth stocks out there, Pepsi? Fantastic company. They've been increasing that dividend for nearly a half century now. They actually just recently announced that dividend increase too. So you know you're already getting an increase in your dividend payment this year. And then on top of that, I love their brand portfolios, all their great soft drinks, and the massive Frito-Lay portfolio that they have as well. So I guess if you're not going to purchase Vanguard, you might as well pick a company like Pepsi to add instead, and Coke for your life.
Yeah, so Coke, my wife, we ended up picking 5 shares on Monday at $50.79, which again was about $254 of an investment on Monday. Very close to what we would have done in Vanguard, but we actually picked up another 3 shares on Friday at $50.38 of KO Coke. And for a total investment again of about $405 for my wife's account. We added over $13.44 in forward income at a yield of just over 3.3%.
Fantastic stuff right there. That's huge. I mean, there's nothing more to say that's great. Congratulations, Lanny and Lanny's wife.
So, hey, that was, again, some 2 big purchases. VYM started coming back down towards the 100 mark by the end of Friday, probably because of the ex-dividend date, and taking that into the equation to keep the price a little lower, because anybody who's investing right now into Vanguard is not going to get, beyond, that March, I think 22nd date is the X date. So you won't be getting that 60, 5+ cent dividend from the VYM. So that's probably taken into factor there.
Probably so.
But Bert, all right. So that was purchases from my wife and I that happened this week. I still have one more to talk about, which is small, but you guys went ham on a dividend king, which arguably could be the best dividend aristocrat ever, period.
Yeah, we just released a video on our new strategy about how we're going to also start purchasing Johnson & Johnson once per week. So this was the first week we executed that strategy. Monday, when the market opened, my wife and I added 1 share of JNJ. I got it. We both got it at $159.75 per share. Added on Monday alone for $8.08 in dividend income, because each one of those purchases got you $4.04. The yield on it was just over 2.5% at 2.53%. It was great to start executing on this strategy that we talked about and we featured in the last video, because much like everything Lanny has said about Vanguard and building the automated investing strategy and just seeing your position grow slowly over time to build a strong position, we are excited to start it, and we actually did that, and we can't wait till next week when we start purchasing on Monday, and then the week after that, and the week after that, through the end of 2021, and then we'll reevaluate. But there's a twist in here. It didn't just stop there, because I was actually pretty quiet during this week. This was a very silent week as the market continues to increase. But there was one stock on Friday that once again caught my eye. That stock, Johnson & Johnson. So I added 1 more share to each of our portfolios as well. And every other stock seemed to increase exponentially during the week for some reason, as we continue to see the S&P 500 hit those record high. Opened up my portfolio, and we saw JNJ was trading at 160.61 for me and 160.59 for my wife's account. When I logged back in, it went down a little bit. So we just said, screw it. It's right around the same price. The metrics still look great. The PE is still just under 17. Payout ratio hasn't changed. Their dividend growth history hasn't changed. They still pass our stock screener. So we each added 1 more share. So adding in on Friday, another $8.08 to our forward dividend income.
Bert was saying, bye, 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 baby.
Yep, and that was all. That was one of them. That was the only stock we bought this week. So we had 4 shares of JNJ, $640 and 70 cents added, and a total dividend income of $16.16. Average yield on purchase of 2.52%.
Boom, right there. J&J, one of the best dividend stocks to buy forever, period, bar none.
Yep. Simple
Dude,
week. Not a lot of research needed. Just we know this is a great company. We want to continue building it. So why not? If the metrics continue to look great, we will continue adding.
Bert, the question is, do you have that purchase lined up for Monday, my man?
Of course. Yeah. That's not changing what we're doing on Monday.
Will you be keeping it at 1 share or going any higher for 1 share per person?
It'll be 1 share. If I want to add more during the week, I will too. I'll do the same thing if I feel needed to. I don't want to mess around with that quite yet. Because if there's another stock that comes up, that's not J&J. I want some flexibility to be able to do so as well.
In community, Bert's on his path of adding over 80 shares of J&J between his wife and his account this year. The amount of dividend income that's going to add is going to be tremendous.
Yep.
Again, company that's increased their dividend for over 50 plus years.
Yeah, and we had some commenters point out that I think J&J has what was the stat? They have the longest streak of companies that have increased their dividend above inflation, which I thought was a really cool statistic to see, which means they're not just increasing a dividend just to increase a dividend, similar to so many of those other companies out there like 3M, where their increase is below inflation. Your purchasing power is increasing as J&J increases your income past the cost of the increase in costs. So it was a cool fact. I was excited to see it. And Lanny, you mentioned you had one more company, one small purchase. Why don't you tell us about that before we round out and summarize?
In essence of scary movie, but wait, there's more. I was actually kind of frustrated because I wanted to grab more, and I need to just be more relentless with my dividend stock purchases, especially if I have cash that is literally idle, earning only 0.5%. And I challenge Bert and myself to really get all of that cash out there. If all our emergency fund is covered, and if you can't really, you've already looking good with Fundrise, which we'll put a link to Fundrise in our description. If you're already trying to evaluate other income producing assets, get the money out there, buy better assets, because money is not really, where it should be if you need to really build up an income stream. So I did purchase one more share of a company that's been on my watch list for the past, I think, 2, 3, 4 months. Again, Warren Buffett talked to us first, then he put in his $8.6 billion into this company. So I bought a whopping 1 share of Verizon, ticker symbol VZ, on Monday as well, March 15th, at about $55.33. This added $2.51 to my forward income. Again, the yield on that purchase price was approximately 4.54%. Again, they're on that path of a dividend aristocrat. I want to get to 50 shares. I'm at about 40 shares right now, and that's producing over $100 in annual dividend income. Still got 10 shares to go, so only about $550 to $600 left to deploy into Verizon Communications, baby.
Perfect. We've covered why Verizon's a great purchase in plenty of videos, so I don't think we need to go too much into it. So nice job. Keep building towards that goal of where you want your income to be for the company, Lanny.
Yep, they passed the Dividend Diplomats screening metrics, below 12 PE, below 50% payout ratio, and they've got growth history.
That's perfect. So to summarize here, my summaries, very easy. Again, 4 shares of J&J, $640 in the market, $16.16 of income added for an average yield of 2.52%. And what about you, Lanny?
So all in all, we deployed $992 rounded into dividend growth stocks at an average yield of 3.34%, which is about 2 times the S&P 500. In total, added $33.15 spread across Pepsi, Coke, and Verizon, as you'll see in the chart.
Fantastic stuff. So again, everybody, remember, keep buying income producing assets, keep seeing your dividend income grow. That's the name of the game on our road to financial freedom. So keep checking in every week to see what stocks we're buying, what stocks we're watching. And you know what? Just come back and watch some good old fashioned dividend news and joking around on our YouTube channel.
Okay, keep watching the DD go at each other. Maybe we'll have a couple battle royales coming up. Obviously, we appreciate you guys for helping us get to 10,000 subscribers. We're so close. Each one counts, each one matters. So thank you. Please let us know what you bought during the week. We love putting out the tweets, and we get a lot of great feedback and conversations going in that way. So we would love to do the same here. We try to get to every single comment, as well as perform dividend stock analyses on our channel for those that you're interested in our take on them. Bert, do you have anything else to add?
Subscribe to our channel if you haven't, and make sure to give this video a thumbs up so we can keep bringing you this dividend news content.
Again, this is Bert the Herd and Big L from the Dividend Diplomats.
Over and out.